regulation. So I left this for the role of regulators, and this was supposed to be a nice, long, considered, the wrong way now, session, but I don't have time. So I think for the regulators, there's sort of three things that could be done to really help improve the remittances environment. The first one is engagement. Engagement between regulators and all the other stakeholders. So that means not just other government departments, but particularly the private sector and either potential new entrants or the current providers to develop a good two-way communication. What you find is the existing money transfer companies have a tremendous amount of knowledge about the people who are sending money, where they are, how much they're sending, more importantly, what they need and what they want, and how to communicate with them. So engaging with the private sector is important. Forming things like working groups, not just to explain what the government wants, but also to listen, is extremely useful. And there are some good examples of other countries where that's really led to quite important changes. Then create a level playing field. Talked a little bit about this earlier, but making sure there's not exclusive agreements, either actual or ones that are de facto happening, what we call commercial exclusivity. Not allow interoperability, particularly in the newer mobile-based services. Having consistency for all. So, as we said earlier, not having specific regulations for banks and different ones for money transfer companies. Allow different types of businesses to participate. And we talked a lot about informal here, but putting in place steps to remove that will be really important. And then actually implement. There's a lot of discussions, but now there's something called the Global Compact for Safe, Orderly and Regular Migration. How many of you are familiar with that? No. Okay, I think we've got some education to do and not enough time to do it in, but basically this was passed at the UN and formally ratified at the end of last year, and basically sets a series of objectives that all the countries that signed up, which I think is 159 countries, are committed to implement by 2030, or the results come in by 2030. Within that, Objective 20 covers remittances, and it has 9 specific actions that governments and private sector operators should follow, one of which is around regulation, but there's a bit about offering inclusive services and so on. I can't go into it all now, but if those were implemented, I strongly believe that if we were stood here in 10 years' time, we would have at least met the goals around a 3% cost, but there would have been a lot more benefits as well. I think specifically, we'll make this the last slide. So for this region, in certain countries it does make sense to implement remittance-specific regulation. I think secondly, we haven't talked about this at all really, but developing national payment networks so that money transfer companies can participate is extremely important, and ultimately that's what will lead to most of the goals being developed. But in many ways the development of local or regional payment networks is never driven by remittances. But because it's not driven by remittances, often remittance operators or transactions are not able to participate in it, and that's a mistake. So there should definitely be ways to allow for remittance-based transactions to participate in payment schemes. Removing exclusivity agreements, there are still some. Financial education, we're going to, I think there's sessions on it tomorrow, but that could continue to improve. Standardised and harmonised anti-money laundering and KYC approaches would be really welcome. And final one, we haven't really talked about, there are some countries that have or keep talking about putting taxes on remittances. If you ever see anybody talk about it, please try and discourage them, because basically all that does is move more money into the informal sector and doesn't raise any money in the first place. It's completely counterproductive, but it's good for getting votes in certain cases. So as long as it doesn't happen, that's fine. Consumer protection legislation is very important. Increasing transparency, what John only very briefly had the chance to talk about, is a useful model. Improving the digital payout capacity. And then some countries are actually looking or talked about establishing remittance-based banks. If you've got large flows of remittances, this may be something quite useful to look at, particularly if you add all the other, or a series of financial inclusion products around it. And then, as you've heard, improving the data collection. So, Juanita, I can see you're poised, so I don't know if we have time for a final comment or whatever, and I'm not quite sure how we get information to everybody, but just to say, I know I've covered a lot of ground. You've all stayed, so thank you very much for that. That's always encouraging. But we'd be very happy to follow up individually with anybody who wants more information on anything.
Okay, so a couple things. Art, how long will you be here at the conference? You'll be here for the 5 to 7 o'clock cocktail reception?
And then I'm here all day tomorrow, so...
Okay.
And then I fly out tomorrow night. Jonathan, you're the same?
Okay, all right, so Leon will be with us through tomorrow and Jonathan through Thursday. Yeah? Okay, but do you all have any last questions before we close? Okay.
I just have a comment that you might want to consider in your research, is that there are situations here in the Philippines where the sender does not trust the receiver. And so what happens is that there are all sorts of companies that have started to offer services directly to senders. For example, grandma has maintenance meds, but you can't trust uncle because he's got a gambling problem. So you are the sender, you can send funds over to Mercury Drug, will make sure that your grandma can pick up the drugs that she needs. And I wanted to find out if that was a factor that you've considered in your research, or what avenues that you have done to perhaps explore that phenomenon.
Yeah, actually that's a really good point, and we see that's where the use of technology is really changing how transactions work. So I think the first thing to say is most senders do not want to send money. They do it because that's why they've gone to wherever they're going, is to send money, but they don't like it. And exactly to your point, they don't want to send it to somebody as a bulk amount and then to get on the phone with them the next day and find they all had a great party, or they've all bought a 100-inch TV or something as a result of what was being sent for other purposes. So this remittances for a purpose, or remittances for a service type of thing that you talked about, is growing, and it can grow because of technology. So we see quite often where a remitter, a sender, will now pay a utility company directly for the electricity that their family needs to use back home. But actually the receiver, in this case, is not whilst the receiver is the beneficiary of the service, the money is actually going directly to the service company. And we're seeing that growing quite a lot more. The challenge, there's a lot of challenges with that which are more operational really, and it's also to do with the size of the transaction, because so many remittance companies have in the past charged a minimum fee. Often it excludes any of these bill pay type services because the fees are too high. But as more technology is being used, they're now getting over that. So I think it's a really good point. We're starting to see it, but we're nowhere near where we should be with it. The lady there, and so the gentleman at the back with the beard, John at the back there.
I think we're also starting to see a different type of behavior that addresses that same type of challenge that people face. So one solution is I don't want to send the bulk of money home, so I send it directly to the biller or the merchant. I think another use case we see is one that you mentioned, in which people send money to themselves so they have access to a digital account. So if I can send a lump sum to my own digital wallet, I then have access to that wallet anywhere in the world. So I can pay an electricity bill, pay for medicine, pay for all these different things that are in this ecosystem of services that's built up through Gcash or Paymaya or coins. And I work with coins, so of course I think more about coins than the other two. But I do see that that's a big use case that's developing because people do want control over the funds. Especially, for example, if you're a seaman, you're away for months at a time, you load up your wallet before you go, and you can make those payments from anywhere in the world anytime you want.
Yeah, hello. Just to comment on maybe both of those points. The first was, I think, in Africa, that's why I've mainly been working, there's quite a lot of sort of product developments from the different service providers which are limiting where remittances can go. So it could be for like the hospital fees, paying insurance, buying this or that, so it's not going to necessarily to the end recipient, but to the service provider of what the money is intended for. The other comment was, you talked a lot about migrant workers not necessarily having their own KYC. I think, again, maybe in Africa it's maybe more a challenge than in Asian countries. This relies equally to nationals of the country as well, of just not having KYC documents.
Yeah, I didn't have time to go into that, and I think the last number I saw was something like 400 million Africans are not able to identify or provide identification document, which is about 1 in 3 of the total continent. And if you look at those above working age, it's nearly 50% of people are not in possession of something that's actually able to identify them. So it's a massive problem there. But your point's right. I think it's also that's where the regulations need to be in harmony with the actual local operating environment. So don't ask somebody to produce a proof of address if that type of document doesn't actually exist in that country. And the problem is if you're sending a remittance, the banker in America who's processing that payment quite often insists on having a proof of address for the receiver in a country with best will in the world they've probably never heard of. So that's one of the challenges we have to get over.
Okay, so unfortunately we're going to have to close the session, but please take advantage of the fact that Leon and John will be here for the next day or two. As you can see, they have a wealth of information to share and more to share. An hour and a half is not really enough time, I think, to talk about remittances, and I think they play a very important role in terms of being a catalyst for financial inclusion. So, thank you. If you all can give a little hand of applause for that. And here, a couple things. Don't leave. We have 5 to 7, a social cocktail reception, and also the hackathon. There'll be 3 finalists that you'll get to hear from for the hackathon challenge, which was an agri-tech fintech challenge. I think that's will be very interesting for all of you to hear. And on your app, how many of you have downloaded the app? Almost everybody. That one row has not downloaded the app yet. Please take a look at the app. I think that I understand there are feedback sessions on a feedback opportunity in all these sessions. So please let us hear from you. So enjoy the rest of the evening and the rest of the week. Okay, thank you.